Hey everybody, Jerome Maldonado, welcome back. Look, I wanted to talk to you guys about 3 economic predictions that I made a little over 2 years ago at Real Estate Domination 2019. What happened in 2019. So as we watched the economy unfold, the pandemic year, and I sat back in front of the room and I told everybody, I don't know what's going to make this happen because I don't have a crystal ball. All I know is I understand how the central banking system works, and I understand how real estate works, and I understand what happened in 2008 over the economic crisis. And the dumb people don't learn from history. The smart people pay attention to their life as they go through things, and they learn from it. And one thing that I've always been good at is taking captive of what's happening to me economically and in my surrounding, and I take note and I learn, and I go out and do research as to why, and most people don't. And so I was sitting down, and what made me think of this is I was sitting down with a gentleman yesterday, and he works for a big home supply company, and he was talking about his prediction on lumber and stuff. And I said, and he was all wrong. He was all backwards. And I remember sitting back in front of a room in 2019, and I said, look, ladies and gentlemen, the Federal Reserve is a non-governmental industry, okay? Non-governmental. And what lands up happening is the Federal Reserve, their job is to print money. What most people don't know, it's a non-governmental industry that's ran and facilitated by the central banking system, the largest banks in the world. So we're talking about JP Morgan, we're talking about Chase, we're talking about Merrill Lynch, Bank of America, we're talking about all the big guys. We're talking about all the central banking system that makes our country go, okay? And so if you take captive of it, the central banking system started the Federal Reserve in 1912. The first year that income taxes were ever implemented was in 1913. And the reason why is because the federal government, the U.S. federal government, was borrowing money from the Federal Reserve, a non-governmental agency, non-constitutional, and what they were doing is they're borrowing money from them and they pay it back in interest. Well, where's the government going to get the money to pay back the interest on the money that the Federal Reserve prints? From you and I. Okay, from you and I, from people just like you and I. That's where taxes first got implemented. Before 1913, there was no income taxes. There was no such thing as federal or state income taxes. They didn't exist. But after they started printing money, they needed to pay for that money. Now, there's laws and bylaws that have been put together for the central banking system. So for those of you guys that think that the central banking system was put together to benefit you guys and myself, you're wrong. If you guys think that JFK got assassinated because of his religious belief, you're also wrong. It's because he wanted to dismantle the central banking system, which is non-constitutional. Now, as corrupt as you might be sitting here thinking that it is, we still live in one of the best countries in the world. But in spite of that, we are getting taxed through our eyeballs now. And so what's happening, and right now, as we sit here, in one of my predictions, I said, look, what happened in 2008 is that the Federal Reserve started printing money, devaluing the dollar bill. But every time the Federal Reserve prints a dollar, they can lend out 10. And so when they go out and if they print a dollar and they can lend out 10, they get interest from people like you and I. You can go out and buy more homes. You can go out and buy more cars. You can go out and finance more on your credit card. And that's why the national debt continues to go. So if you sit back and you look at the national debt clock, which I could pull up right now, and you go to the national debt clock, and let's pull it up right now. U.S. national debt clock. And if you pull this up, and you see the numbers just go, the numbers just don't stop. They just revolve. They continue to go. So I'm going to see U.S. Federal Tax Reserve, and you just see that number. You just see that number just going in the green, right? That's the Federal Tax Reserve. Now here's the state debt, our federal budget, U.S. national debt, right here in red. Okay, look at how fast that clock is moving right there. Look at how fast that debt just keeps going up, just keeps growing and growing and growing and growing in thousands upon thousands and hundreds of thousands of dollars every single minute. That debt clock just keeps going. That easy, just to find the U.S. debt clock. Well, ladies and gentlemen, what ends up happening with the Federal Reserve is as they print money, they can just give it back out to you guys. And that's why the federal government just keeps pumping money into the economy. And what I said in 2019, I said, the way the U.S. economy works is that they print more money, it devalues the dollar bill, but they can lend more money. The central banking system can lend more money. So if you start seeing how, after the recession of 2008, the financial crisis of 2008, what they landed up doing is they said, okay, we're not going to give D-credit loans to people with 580 credit scores anymore. We're not even going to give them to 620. You have to have a 680 to get a mortgage now. And so they tightened up the loan parameters to be able to go out there because they said it was a mess. Well, what have they done since 2008? They created the CFPB, and they sat back and they go, okay, we're going to go out and we're going to start giving people with A and B credit only mortgages. We're going to charge people with B credit. We're going to charge them a little bit higher interest. But C credit, you're going to have to put a bigger down payment, and we're going to also charge you more interest, but no D credit is going to happen. And so then slowly over the last few years, you start seeing the credit score go, okay, Fannie Mae and Freddie Mac going, okay, we're going to lower the parameters to a 650 credit score. Then it was 620. Now they're giving D credit to people with 580 credit scores and putting them in homes. And here's why. Because what happens is they pump money into the economy. They're able to lend money to D credit. Now, the entity that owns the most real estate in the world is the Federal Reserve. And here's why. Because people with D credit usually have an excess of 60% debt to income ratio, and so they're overspending already. They're the ones that are creating a lot. Well, we all are. We're all creating that national debt, but they're the largest contributors to it. And so they're pumping D credit mortgages into the hands of D credit buyers, and then the real estate market just starts to boom. And so back in 2019, I was explaining this in front of the room, and I said, I don't know what's going to create and give the ability to the Federal Reserve to start printing money again, but it's going to happen. And is God is my witness. You sit back, you look around, the pandemic hits, okay? The pandemic hits, now all of a sudden we all need these bailouts, right? So the government, businesses need bailouts, individuals need bailouts. The Federal Reserve is contacted. Our government goes, hey, Federal Reserve, can you guys print out another $5 trillion? We need to pump it back into the economy. Or what was the first one? $2 trillion? We're going to pump it back into the economy. And so they're sending out all these stimulus checks. Because ladies and gentlemen, people are people. And what I was taught by my mentors years ago, they said, Jerome, you could take all the wealth in the world, all of it, and you can distribute it equally like people want it. They're like, it's unfair. There's wealth and then there's poverty and there's nothing in between. There's a very small amount of middle class. Why do all the wealthy have all the money? And here's why. Because ladies and gentlemen, if you take all the money in the world and you distribute it equally, in 5 years, the money will be back in the exact same hands of who control it today because of how they think. It's the information that I'm giving you guys right now that separates the wealthy and the poor. It's knowledge. It's the information that the people that live in poverty don't have. And so, ladies and gentlemen, I sat there and I sat in front of the room and I said, look, I don't know what's going to create the ability for the Federal Reserve to start printing money, but something is. And ladies and gentlemen, it was the pandemic that did it. Second thing I said is they're going to land up lowering interest rates because when they lower interest rates, more buyers can buy homes. Okay, so I said they're going to lower interest rates. That was my next prediction, because when they start pumping money into the economy, they want people to be able to spend that money. Because if they spend that money, what do people do as Americans? What do we do? If you get $10, how much do you spend? 50. You get 10, you spend 50. And so they know if they put 5,000, 6,000 into every single household, they're going to go out and take that 5,000, 6,000. They're going to go and spend 25,000. And so, ladies and gentlemen, that's just what the American public does. That's why the national debt just keeps revolving, and that's why those numbers are growing so fast. So they pump that money into the economy, and then they lower interest rates. And so now people's eyes get big and go, wow, I could not have afforded a $500,000 house a year ago because interest rates are lower. I don't care what I'm spending on the house. My monthly payments, I can afford a $500,000 house now because my interest rates are low. So then what happens, the Federal Reserve starts to raise interest rates. So they're going to lower them. They're going to start pumping money into the economy. Then the third thing they'll do is they'll raise interest rates again. And so we're predicted to go from a prime rate of just over 2%, 3%, 4%, back up to close to 5% by the end of the year. So now all of a sudden, people can't buy those same homes anymore. They can't get into the same type of real estate. The interest rates start to go up. People that have fluctuating mortgages, fluctuating interest rates, now they can't afford those payments. All of a sudden, the Federal Reserve, we start seeing foreclosures come back onto the market. Ladies and gentlemen, I've been shopping real estate for my entire life, but over the last 7 years, I've sat back wondering when all this was going to happen because things were getting super inflated. And you sit back and you go, okay, something has to give. And so, because people can only afford so much, right? When inflation happens. And so, what ends up happening is they land up spending all that money, and they print the money, they put it back into the economy, and then people start spending all that money, and then I go in and I look for real estate, and there's no foreclosures. There's nobody that's financially stressed in the entire United States. Not in multifamily, not in office, not on individual homes. There's very few and far from coming out to the market. Now, when everything happens and the Federal Reserve shuts off the lights, money stops getting printed, interest rates start to rise, what happens to the average person? They go into a frenzy because of what I was telling you guys about earlier. They don't have the financial literacy to understand how to balance that out, so they continue to spend until their credit is tarnished and they can't spend no more. And then the banks come back in and they take ownership of all that real estate, all those automobiles, and they start owning some of your number one prized possessions and your largest assets start going back to our federal government, to the central banking system, not our federal government, sorry. You go back to the central banking system. And then the central banking system doesn't want to collapse the market again, so they don't just dump all these foreclosures out to the market. They take ownership of them. They pay individuals to go out and go by the houses, knock on the doors, see if their assets are protected. Do they need to be winterized? Are we going to have frozen pipes? Is the house going to flood? Is there landscaping? And ladies and gentlemen, they go and take ownership of these, and then they have management companies just facilitate the upkeep on these homes, and they won't even release them to the market right away. In fact, you can go into foreclosure, and they may take 6 months before they take that house from you because they want you to live there. They want you to hang on to their asset and continue living in it and making sure that it's heat and cooled and everything, because that's their asset now. It's not yours, but you can live there for free. I had a buddy in the gym years ago. I remember Andrew asked me, he goes, and Andrew, if you're watching this, bro, I love you, man. So look it. Hey, Andrew came to me and he said, he was working for a window company in Santa Fe, New Mexico, and he was in sales. When the economic crisis hit the roof, he said, Jerome, I'm going back to school. I'm done with this because I'm in sales. My commissions are low. I can't even afford my house. He goes, what should I do? I'm going to lose my house, but I'm going to go back to college. So he went back to college to get a degree in the medical field, and he goes, and I said, you know, Andrew, just stay in your home. And he goes, for how long? I go, I don't know. Just go back to school. Don't worry about it. And he goes, did not pay my mortgage? No. They said, no. I said, there's too many homes going on foreclosure. Why would you pay your mortgage and go anywhere else? Don't leave. Just stay there until they make you leave. Ladies and gentlemen, he went back to school for 2 years. And on the 18th month of the 24 months, he got notice that he had to vacate in 60 days. He had to leave 4 months before he graduated college. Ladies and gentlemen, at the end of that 20 months, he goes, Jerome, thank you so much for telling me that I didn't have to leave my house. He goes, I would have left a long time ago. He was able to go to college, live for free without paying his mortgage. And ladies and gentlemen, I'm not telling you guys to do this. I'm just telling you a simple story of what a friend did and how the world really works. He was able to go out and he goes, I don't even want to buy a house anymore. He goes, I go, the only problem with doing that is you're going to ruin your credit, and then you're not going to be able to buy another house. He goes, I don't want another house. I'm going to go live in an apartment. He goes, I'm done. It was him. Doesn't have no kids, didn't have a wife. It was him. And so he went back to school, lived in his house, because they don't put the houses back on the market immediately. They have to introduce them back to the market slowly. The inventory has to go back to the market super slow, and then as the market absorbs those homes, they release more and more and more of those until they're all absorbed. And over the course of a few years, they put parameters. Yeah, we want end buyers. We don't want investors. If an end buyer doesn't want the house, then we'll sell it to an investor. And so that's what we battled in Arizona back in 2009, 10, 11, is that they started to put parameters on us investors buying homes, and they'll do it again. And so, ladies and gentlemen, look, I've studied this stuff. It's my full-time life. This is what I immerse my life in professionally. And I don't just teach it, because, ladies and gentlemen, I just started teaching this stuff a few years ago. I live it. I breathe it, and we facilitate it each and every single day. You want to learn how the wealthy get wealthy, keep their money, and they continue to parlay it? Keep following me. Pound and subscribe to my YouTube channel. If you like the content, give us a thumbs up. But there's one thing that I don't want you to do, and that's sleep on the information. Go back, rewind, rewatch. This information is good information. I live it, I breathe it. And now it's your opportunity to learn it for free.